News Central, bringing you your January 13th cattle industry headlines. Brought to you by Ag Risk Advisors. They provide risk management programs to livestock producers all throughout the West. Whether you are concerned about price or weather risk, Ag Risk Advisors, they are here to help. With current day market fluctuations, there is nothing more important than locking in a price floor on your cattle, so reach out to an advisor today if you would like to learn more about an LRP. Also sponsored by American Beef Producer Magazine. ABP Magazine offers in-depth articles concerning a wide variety of topics within our industry. They feature award-winning photography and so much more within their publication. If you are not already subscribed to ABP Magazine, head on over to their website, abpmag.com. Up in the right-hand corner of their main page, you will find a large subscribe button. Go ahead and click on that, and they will get you all fixed up. American Beef Producer Magazine, guiding beef producers for over 25 years. And finally, Circle 5 Cow School. If you're wanting to learn how to preg check your own cows or start AIing, Circle 5 Cow School is the way to go. They host classes from Tennessee to Texas almost every week. To view their schedule, head on over to circle5cowschool.com. That is the number 5 in there, or you can go ahead and just give them a follow on Facebook. According to Brownfield Ag News, Dr. Paul Walker, president of the Illinois Beef Association, he doesn't believe that mandated negotiated cash trade will increase the market price for cattle. While speaking with Brownfield Ag News, Walker said that the current fed cattle marketing system is broken and the beef industry needs to be proactive and fix it. The best fix would be to link the beef cutout values to live cattle prices instead of mandating cash purchases by the packers. If you tie live price to the retail side, said Walker, and put those in a proper ratio, the packer has to keep that ratio to feedlot operators, equity or advantage. If the industry would take this route, it wouldn't take away from the packers' ability to utilize AMAs or mandated negotiated cash trade volume. This fix would set the daily price for what low choice is going to be and doesn't let the packer arbitrarily say that they would give $135 or $138 for someone's cattle, or basically try to get away with what they can. The Illinois Beef Association delegation will be bringing this proposal to NCBA's annual meeting next month. According to Tom Brink, CEO of the Red Angus Association of America, he believes that fed cattle prices will continue to increase over the next few years. He has 3 main reasons why. The first major point is that fed cattle prices have been and remain in a long-term uptrend. Higher prices come about due to inflation, nominal demand growth, new product development, larger exports, and a variety of other factors. In the short term, it may not seem like prices are increasing, but if you look at fed cattle prices from a long-term perspective, if you look at the big picture, you realize that the natural direction of the market is higher. The second point is that cattle and beef supplies, they ebb and flow, as we all know, which is one of the main reasons we see such extremes. We see such high prices and then such depressed prices. For example, so back in 2014, 2015, we remember those years so well. Beef supplies were fairly tight. We had a shortage of cattle in our beef herd. We saw fed cattle prices jump $34 to $41, said Brink. During those 2 years, record prices were set for the fed cattle market. The industry today is looking at a shortage of cattle due to drought and other factors, so we will most likely see tighter beef supplies coming down the line. We obviously already are seeing a reduction in our beef cow herd, so most likely that will be positive for cattle prices, said Brink. Finally, Brink said that the pandemic was tough on cattle markets. That's probably an understatement. COVID-19 disruptions decimated cattle demand when packing plants struggled to keep operating and restaurants closed their doors. He believes that the industry has finally worked through that backlog of cattle that was caused because of the pandemic. Fed cattle prices during the last 2 months of 2021 rallied because of this, because we finally worked through that glut of cattle. And that rally is a leading indicator for the direction that the market is headed over the next few years. So when we look ahead to 2022 through 2024 market fundamentals, the majority of analysts are predicting smaller cattle numbers, continued strong beef demand, growing exports, increasing packing capacity, and much better market leverage for feedlots. According to Brink, the fact that packer margins have been and remain large simply provides more upside price potential as the fundamentals become more positive and leverage shifts back to the cattle producer. Brink is a strong believer that we will see a significant uptick in fed cattle prices in 2022. Then in 2024, when additional packing capacity comes online, he thinks that prices will get even better. Brink projects that by 2024, annual Fed prices have the potential to set records somewhere around 165 to 170 on average. And there is a possibility that prices could go as high as 180 or higher. Of course, it's going to take some time to see these prices, but if history coupled with expected market fundamentals play out like they should, cattle producers should see upward profit over the next few years. Finally, Drovers has reported that Cattlemen's Heritage Beef Company is searching for investors for their $450 million processing facility project back in Iowa. The packing plant will be constructed in Mills County, Iowa, which is just south of the Council Bluffs, Omaha area, and will kill approximately 1,500 head per day. The plant will employ up to 750 workers and have an estimated annual economic impact of $1.1 billion. Construction is set to begin this spring, and the plant is expected to be operational by December of 2023. According to Bill Menner of Bill Menner Group, which is an Iowa-based consulting firm, there is $75 to $90 million available in grants to fund construction. Cattlemen's Heritage is offering to sell 100,000 units to investors. The minimum purchase is 67 units, which totals out to be $100,500, so each unit costs $1,500. Menner closed by saying that the plant's 4 ideals are sustainable operation, medium size, innovation and transparency, and producer owned. That is all I have for you guys this morning. I hope you all are having a great week. I hope you are enjoying this gorgeous weather here in central Nebraska. It's been wonderful. I think it got up to almost 55 yesterday. Pretty crazy for January, but I am not complaining. Have yourself a tremendous Thursday, and I will catch you later.